The Fed could go in and buy long-term debt and try and drive it down. But I mean, they'd end up buying the whole bloody lot. We are coming to the end of a period of fiat currencies. That, to my mind, is evident if you look at the facts, if you like, the real facts. And if you analyze them properly rather than just following your nose while it's on the grindstone, as it were. I think that basically what's happened by Trump starting this ridiculous attack on Iran, whether it's at the behest of Israel or not, is immaterial. But the fact that America has got involved is the worst political decision, I think, probably taken by any president in the history of the United States.
The global financial system is entering a critical phase as mounting debt pressures and persistent monetary expansion challenge the sustainability of fiat currencies. Central banks are increasingly constrained, with tools like long-term bond purchases offering only temporary relief while deepening structural imbalances. As yields rise and confidence weakens, the idea that the current system is approaching its limits is gaining traction. At the same time, geopolitical tensions are adding another layer of instability, accelerating the shift away from traditional monetary frameworks toward real assets and alternative stores of value. Alasdair Macleod, a veteran monetary analyst and longtime observer of global currency systems, argues that these developments are not isolated but part of a broader transition. He emphasizes that aggressive monetary intervention combined with escalating geopolitical decisions could undermine confidence further, reinforcing the case for a systemic reset. In this environment, markets are likely to respond with increased volatility while capital gradually moves toward perceived safety. Now, we present the clips from Alasdair Macleod's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
We are coming to the end of a period of fiat currencies. That, to my mind, is evident if you look at the facts, if you like, the real facts. And if you analyze them properly rather than just following your nose while it's on the grindstone, as it were. I think that, basically what's happened by Trump starting this ridiculous attack on Iran, whether it's at the behest of Israel or not, is immaterial. But the fact that America has got involved is the worst political decision, I think, probably taken by any president in the history of the United States. This, remember, was meant to be a war which was going to be over a weekend. And here we are in the third week. And I can tell you that if you look at what the Americans are saying, it's completely at odds. And also the mainstream media, including our mainstream media, is completely at odds with what geopolitical expert analysts are actually saying. And a lot of these guys have regional knowledge, which extends into intelligence and everything else, who understand the task, if you like, that America has taken on. America's not going to win this. It's as simple as that. And we can already see that Trump is, chickening out. Taco. Trump always chickens out. I mean, what he's doing is he's saying, he said, we'll go in, first of all, we'll go in and we'll beat the bastards over the heads and we'll kill this and we'll kill that and all the rest of it. All he's done is he's killed civilians. Okay, he killed the leader as well, but he's just killed civilians. The military side, which includes, incidentally, an army of 1 million people, 1 million military soldiers, is still intact. It's still there. It hasn't been hit. I mean, okay, a few missile launchers have been hit, a few dummy aircraft maybe have been hit, airfields have been hit, that sort of thing. But the military has not been hit at all. And what the Iranians have been doing is they have been lobbing, if you like, old ordnance at Gulf states and Israel. We're talking about ordnance which was, dates back to 2013, 2015. And that basically has taken out all the interceptors. Basically the Israelis, the Americans, and also the Gulf states have run out of missile interceptors, and drone interceptors. Okay, they've taken them out. The next phase is that we'll start seeing the more modern stuff, which travels at Mach 7. I mean, we're talking about hypersonic missiles, which these guys have. That will start attacking. We've also seen a bit more evidence, because obviously this seems to be all under a D notice. I mean, for non-Brit viewers of this, a D notice is basically a ban on publication about a particular subject. And this particular subject is the extent of Iranian attacks on Israel and also American bases around the Gulf. Americans who say, "Oh, we had an accident with 2 planes over Kuwait, but the pilots are all right." Okay, they were shot down. I mean, and it's not friendly fire. This was Iranian. And what happened to that tanker which crashed, killing 6 crew? That was shot down. I mean, the delusionary aspect of this war through the press, propaganda, and all the rest of it is completely at odds with the reality. And now I think it's going to start. Now, my view is that Trump is already backing out because, from his point of view, the war wasn't meant to last more than 3 days. And okay, there's been a lot of bluster and all the rest of it. He then unwisely says, "We'll go in and we'll ensure that ships can go through Hormuz. We will send in carriers, Navy, whatever. We're shipping." Sort of, if you like, experts, sort of commandos or equivalent, if you like, from the Pacific to go and take Hormuz. And I think he's sort of suddenly been told by this Pentagon staff, "Look, mate, this is not going to work. An awful lot of Americans are going to get killed." So what does he then do? What does he then do? He turns around and says to his NATO allies, "Come on, you've got to send your stuff in as well." Peter, this is going to be a repeat of Gallipoli if they do it. I mean, this is just crazy, absolutely crazy. And Trump's problem is that he's now got to try and find a way of backing out. But even if he backs out, as far as the Israelis are concerned, Satan, which is what they call the Americans, has got to be driven from the area. They will continue. And any sheikdom in the area which hosts American military bases is going to continue to be pummeled. And very, very accurately, because the Chinese have a spy ship, if you like, in the Gulf of Oman, literally feeding all the intel that they need for accurate precision strikes. I mean, basically, the Americans are going to be driven from the area. And of course, we haven't had the other nice little bomb problem coming up, and that is the Houthis, who will block out the Red Sea. Why is that important? Well, the only stuff that's getting out of Saudi Arabia is via a pipeline that goes to Yanbu. So, and that's on the Red Sea. So that's going to be blocked to the southern end. Okay, you might be able to send some ships in through Suez, as long as they're not too large to go through. But, Peter, this has only just started. It really has. And the consequences for the price of oil, that again has only just started. And if this goes on well into April, and in my view is going to go almost through the whole of this year, or however long it takes for Iran to achieve its objectives, then who knows where the oil price is going to go. And the other problem, of course, is that the refining process of reducing oil into downstream constituents means that things like nitrogen, sulfur, and all the rest of it are not being exported. And we were talking about huge, huge quantities. And all this is feedstock into fertilizers. And, when do we need fertilizers? At the beginning of the Northern Hemisphere's growing season. We need it now. And so suddenly, the fertilizer is not going to be there. And with intensive farming methods, which rely on fertilizer, modern fertilizers, we're going to have food shortages. So, when you see the Office for Budget Responsibility say that, we think that this is going to add 1% to the inflation rate by the end of the year, shock horror, they're not thinking this through. They're nowhere near what's going to happen. So this, Peter, is an enormous disaster. And in financial markets, it's going to drive up bond yields. We've already seen UK 10-year government gilt is knocking on into new high ground, just about. But it'll go there. Germany is already there. And France is already there, new high ground with their oats. You've also got Japan. I mean, basically, if you look at G7 bond yields, they are all shooting up, going into new high ground, or will go into new high ground. And that at a time when leverage plays in the market are so prevalent, like, private equity and stuff like that. I mean, this is a financial disaster. It is a real disaster. It's going to crash markets, particularly equity markets, which are very overstretched relative to bond yields. And what does the Fed do? I mean, does the Fed follow its inflation mandate, or does it participate with the US Treasury in trying to rescue the banking system and everything else which might be falling over? Tough choice, but I know which way it's going to go, because the political mandate is quite clear. You basically got to rescue everybody. That's what's going to happen. So the dollar is going to be debased. It's the end of the dollar. And the point is that while I didn't have a timeline in terms of how long it would take for the end of the fiat dollar and the currency system based on it, now we can pencil in a year or two, no more than that.
The global financial system is entering a highly unstable phase as rising geopolitical tensions intersect with weakening fiat currencies and surging bond yields. Escalating conflict risks are beginning to disrupt energy flows, pushing oil prices higher and threatening supply chains tied to fertilizers and food production. At the same time, sovereign debt markets are showing clear stress, with yields climbing across major economies as investors demand greater compensation for risk. This combination of inflation pressure, supply disruption, and financial fragility is creating the conditions for a broader systemic shock. As these pressures build, central banks face an increasingly difficult path between controlling inflation and stabilizing financial markets. Any attempt to support markets through liquidity injections risks accelerating currency debasement, while tightening policy could deepen the downturn. Equity markets, already stretched, appear vulnerable to sharp corrections as liquidity tightens and leverage unwinds. The broader implication is a rapid loss of confidence in fiat-based systems, reinforcing the shift toward hard assets and alternative stores of value. The trajectory suggests that the current monetary framework may be approaching its final phase as structural imbalances intensify. Let's get back to the interview.
Every fiat currency system has collapsed in the past. This one is in the waiting room. It is, if you like, it's in the funeral parlor, let's put it that way. Your reference to the 70s is interesting, because the 70s and this decade basically are bookending the fiat currency system. I mean, the fiat currency system survived the 70s but only just. And the reason it survived was because you had a Fed chairman in the form of Paul Volcker, who said, we've got to rescue the dollar. It's obviously sliding. We have to raise interest rates to whatever it takes. And he raised in those days, I think it was the prime rate, up to 19.5%. He killed the savings and loan industry. I mean, that all fell apart. But it stopped the inflation and led to a period of stability with declining bond yields, if you like. I mean, they fell. But even that long period between 1981 and sort of 2016, even that long period sowed the seeds of the destruction of the dollar. Because what happened was you had the first real carry trade developed, which basically was, you would lease gold at 1%, sell it into the market for dollars, invest the dollars in T-bills, which were giving you anything from 10% in the early days and sort of declining down to 5% by the end of the last century. And you leveraged it up, and it was wonderful. But, of course, how did you get your gold back? Well, the answer is you didn't. It just rolled and rolled. And, I've quoted this so often. Frank Venerosa, analyst, looked at this. He spoke to people, who wouldn't talk nowadays because the whole subject has become so sensitive. But in those days, he could talk to all sorts of people, including the head of foreign exchange at the Bank of England, who I knew personally. I used to lunch with him occasionally. And he concluded by around about 2002 that between a third and a half of all official central bank reserves had gone out on lease. And the way he put it was, and it's probably adorning the necks of Asian women. Now, he was right about it going out on lease, but there are two things in here. Firstly, it didn't go out and adorn the necks of Asian women. Because, if you look at India, for example, the Gold Act, I think, whereby gold was restricted to, it was illegal to import gold. I think that was about 1992. No, China was in there picking it up. So China bought all that gold. Now, who actually leased it and hasn't got it back? Well, it's quite clear. It's the Americans. So they don't have 8,130 odd tons, which they claim to have on the US Treasury's balance sheet. No, most of that's gone. And indeed, we had this confirmed because they also raided the earmarked gold held in the New York Fed. So, we discovered this when Germany said, "Oi, we'd quite like a little bit of our gold back." Ooh, it's going to take you 7 years for us to deliver it to you, was the eventual agreement. So when we go back onto a metallic standard, which incidentally was all set out in Roman law, which is the basis of our common law recognition of the difference between money and credit. And I don't care what governments say, that is actually still the position. I mean, the answer is that America does not have its gold to defend the dollar, even if it wanted to go back on a gold standard. And that is why successively people who have become, gone from outside into government and been appointed, if you like, in positions of responsibility, have started off saying, we need to audit the gold. And when they get into position of responsibility, suddenly, stumm. And that, Besant, very good example. This situation is very, very bad for the dollar. So we're now in the final stage. So we've had the first bookend, and now we've got the second bookend. And quite frankly, I think that what we're seeing in terms of what's driving things in America and will drive things is politics, not economics. It's just amazing if you reread the history of the collapse of the Weimar Republic and the Reichsmark, the similarities with what's going on today. I mean, okay, different circumstances, but the similarities of what's going on today from the political end are very, very similar. But I would say that the people who presided over the collapse of the Reichsmark actually had a better grasp of economics than the economic establishment in America today. So in that situation, there's, anyone who thinks, oh, can't possibly make that sort of error. Well, of course we will. We're already seeing it too. I mean, rising oil prices, everybody's jumping out and saying, oh, we'll subsidize it. We'll make sure that the poor, can buy their heating oil or their gas or whatever. But then you've got all the food. As I said earlier, the Gulf, as a byproduct of its petrochemical business, produces something like, up to half the world's sulfur, which is, the basic element that you have in phosphates. And you're looking at urea, something like a third of the world's production of urea comes out of there. There is going to be a shortage of the fertilizers upon which we depend for our food production. The inflation effect on food prices is going to be enormous. What will governments do? Well, you can put all your money on one outcome, and that is they will rush to subsidize. So you get subsidized prices, which increases demand against a limited supply. What happens to prices? They go up. What do governments do? They print the money to ensure we can pay the higher prices. You don't need to be terribly clever to see this stuff. That's where we're going. And ultimately, it is the destruction of the medium of exchange, which is fiat currencies. That's going to happen. And the moment China, turns around and says, right, we've got a fixed exchange rate, we're fixing the exchange rate between yuan and gold, then, goodbye dollar.
The current monetary system appears to be approaching a decisive turning point as structural weaknesses in fiat currencies become increasingly difficult to contain. Rising energy costs, supply disruptions, and tightening resource availability are feeding into a broader inflationary cycle that governments are attempting to manage through subsidies and increased spending. These responses, while politically necessary, risk amplifying the problem by expanding money supply against constrained production, creating a feedback loop that accelerates currency debasement. Historical parallels suggest that such dynamics often emerge in the late stages of fiat systems, where political decisions begin to outweigh economic discipline. At the same time, confidence in sovereign balance sheets is being challenged as debt burdens rise and real assets become more strategically important. The potential for a shift toward a commodity-linked framework is gaining attention, particularly if major economies begin exploring fixed relationships between currency and gold. Such a move would fundamentally alter global trade and reserve dynamics, reducing reliance on traditional fiat anchors. As these pressures converge, the trajectory points toward a profound transformation in the global financial architecture, driven by both necessity and loss of trust in existing systems. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by liking this video and subscribing to our channel for more financial insights. Don't forget to hit the notification bell so you never miss an update. Thanks for watching.